Definition: small and medium enterprise are companies that, depending on the nation's classification system, normally employ 10 to 100 people. These enterprises are vital for economic growth, contributing significantly to innovation, job creation, and also the overall gross domestic product (GDP). The features include small and medium-sized enterprises operate in unpredictable conditions with limited resources, rendering them to sensitive financial hazards. The second feature is they also frequently rely on conventional techniques of record keeping and also have difficulty obtaining external financing. The last feature is SMEs are also recognized for their adaptability and also ability to respond rapidly to changing market conditions. SMEs also have their own strength and also weakness. For their strength, small and medium-sized enterprises play a crucial role in promoting local economies, creating diverse business ecosystem, and also creating opportunities for entrepreneurs. They also contribute to economic stability by filling market gaps. As for their weakness, it is restricted access to established financial system, a lack of financial knowledge, and also issues managing cash flow. These enterprises frequently rely on informal funding, leaving them more vulnerable to financial volatility. They also confront operational hurdles such as intense competition and also regulatory requirements.
Many SMEs face challenges in managing their cash flow, using resources effectively, and setting realistic financial goals. Without proper financial management, businesses may struggle to cover daily expenses, invest in growth, or even stay profitable. Why these issues can happen? These issues happen mainly because of SMEs often lack clear financial plans, do not have proper budget controls in place, and also fail to review their financial performance regularly. Without a structured financial approach, businesses can easily overspend, misallocate resources, and miss their targets. So to solve these challenges, SMEs should focus on 3 key steps. The first one is create a financial plan. For example, businesses can outline their expected income and expenses for the next 6 months to better understand their financial position. Second, use budget controls. A simple way to do this is by setting a spending limit such as 2,350 ringgit per month for marketing to avoid overspending and stay within the budget. Third, review financial performance regularly. For instance, businesses can check their monthly profits and expenses to see if they are on track and make adjustments if they need it.
The next issue is about cash flow management of small and medium enterprise. The ineffective cash flow management will make it difficult to meet its short-term obligation and missing opportunities. How this problem happen and what are the solutions? The first reason is because of lack system to track and forecast cash flow regularly. The solution are need to regularly forecast the cash flow of the business, utilize specific accounting software for the business to monitor the cash flow, and also maintain cash reserve to avoid over expenses. The second reason is because of delay in customer payment and inefficient management of payable. The solution is need to improve receivable and payable management by introducing clear credit policies, follow up on overdue payments, and negotiating better payment terms with suppliers. The other reason is because of often allocate excessive funds to purchase fixed asset leads to insufficient cash for operation. The solution is to adopt a balanced approach by evaluating the return on investment of fixed assets when purchased them. Other than that, small and medium enterprise also need to consider alternatives like leasing or renting equipment to preserve cash flow for operational needs.
Next issue is difficulties of financing funding. This is because of limited access to funding because difficult to secure loans or investment due lack of collateral and credit history. We can solve this problem by diversity funding sources. The first one is crowdfunding. It is usually a raising fund from a large number of people, usually through online platform, by presenting your business idea and offering incentive. It is a low entry barrier, which ideal for startup and small business without access to traditional funding like bank loans. And the second one is engagement oriented. It builds a community of early supporter or customer. And the last one is flexible model. Equity crowdfunding. Backers receive a share of your business. The second one is government grants. It is a financial aid provided by government to SME to support growth and development without requiring repayment. It is aimed at fostering entrepreneurship, innovation, or job creation. It is a non-repayable. It is and also often tied to specific initiative like research, expansion, sustainability, or training. Eligibility criteria. The business must meet conditions such as business size, location, or project type. Last one is venture capital. It is a private equity financing where investors provide funding to startup or small business with high potential in exchange of equity. The first one is equity exchange. Venture capitalists invest in return for a percentage of ownership in the business. The second one is focus on high growth, which target the potential business for rapid scaling. The third one is active involvement. Venture capitalists provide mentorship, strategies, advice, and access to networks. For example of the venture capital, we can see from the TV series, which is Shark Tank.
Moving on, risk management is one of the key financial strategies for small businesses. It helps to protect their organization's assets and ensure its continued operations in the future. Therefore, SMEs have to implement risk management in order to reduce their financial risk as much as possible. There are a few strategies that SMEs may employ to mitigate risk. The first one is to diversify clientele and revenue streams. So what this means is for the business to appeal to a wider range of customers and create more varieties of products. Using this strategy, SMEs will have multiple sources of incomes and reduce their dependency on a single source of income, which will help to stabilize the company's or the business financial status. For example, you can add new features or complementary products to the existing ones in order to attract more customers. Besides that, SMEs should establish financial control as a form of risk management. Financial control is the management of financial resources to ensure that they are used efficiently and effectively. Besides managing risk, financial controls can help the business to prevent errors, to detect frauds, to facilitate business operations, and make informed decisions. Examples of financial controls are budgeting and cash flow management. Last but not least, SMEs are also advised to apply for insurance. It can protect the business from unexpected events that can cause significant financial loss. Basic insurance coverage that SMEs should have includes business property coverage. This insurance helps protect your business against loss and damage of building and equipment due to events such as fire, flood, or water damage. Second one is liability coverage, which protects against financial loss resulting from bodily injury, property damage, medical compensation, lawsuits, and etc. The third and final example of basic insurance coverage is business interruption coverage. This coverage covers the loss of income and business expenses such as rent and employee wages when operations are stopped due to disasters.
To sum it up, while SME face challenges like limited funding, cash flow issues, and tight budget, there are practical steps they can take to turn things around. One of the first things is to diversify their income so they aren't relying on just one source of revenue. This makes the business more resilient when things change. Keeping a close eye on cash flow and having strong financial control help businesses stay on top of their finances and avoid surprises. It's also important to have a clear financial plan. Setting a budget and reviewing it regularly ensure the businesses stay on track and can adjust when needed. And don't forget about funding. SME shouldn't just stick to traditional loan. Crowdfunding, government grant, and venture capital can be great ways to get the financial support they need. By using these strategies, SME can strengthen their business, boost efficiency, and stay competitive. And in the process, they contribute to the economy by creating jobs and sparking innovation. With the right approach, challenges can turn into opportunities, leading to growth and long-term success.